friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and plan for a better trade for the next day. So today is a holiday, and yesterday we had again some kind of consolidation that was happening. This range bound day, but market had gapped up in the morning, right? So it's flat sideways movement is happening all around. Let's see what can we plan for the next day. Let's get into the charts. So this is the pre-market analysis for May 4th, Wednesday 2022 tomorrow, and we're doing that based on all these parameters that you see. We would also have analysis of the additional data, right? Like global commodity, global markets, Fyers, Vauld, all of this, and then we'll wrap up with a market view, and we'll have some actionables also, right? So let's see the charts. So this is Nifty and Banknifty. So left side Nifty, you can see that it had a gap down, right? It retested the previous levels, right? We had a swing, so it retested that and then gave a bounce. So it is a gap down and a bounce. Same with Banknifty. We had a gap down and a bounce, and both have formed green candles because it had a gap down and then closed above that. But only Banknifty could close in green. Close in with points above the previous candles high, previous candles close. Nifty couldn't do that. So that's the price action that happened. So the candle looks green and bullish, right? But it had a gap down and it retested and bounced basically. Another view on the on the same Nifty and Banknifty, you can see that it just still has not crossed the 20 and 200 EMAs, and same with the case of Nifty, both Banknifty also, right? So 20 DMA is crucial, right? And 200 DMA is also crucial, and it does not happen. So basically, it's a M pattern that you can see here, right? M pattern is bearish. It's also known as double top, right? So if this neckline point of 16,800 is broken, then there is a likelihood that an equal amount of the height of the M pattern can go down, right? So got to keep close watch on that. So M double top pattern is formed in Banknifty also. You can see that. If you closely watch, the price has gone up, come to the middle, gone up again, and then come to the bottom. So that's a double top formation that has happened, and that is also resisting below the. So there is a it's at a crucial resistance. It's under resistance for sure, both indices, as long as it's below the moving average supports that we had earlier. And it's also a neckline point where it can break down. Any close below the previous candle low would potentially mean that there can be a good downslide. Now intraday, we had seen what price action. Right? We had a gap down and then it consolidated within 100 points, and within 400 points more volatile consolidation was what happened. Nifty, but it required a little more extra and managed to close above the previous candle high. Now Bollinger Bands are saying a story. What is that? It's consolidation for sure, right? Volatility is there, bearishness is the bias, and that bearishness on the Banknifty is little extra because you're seeing that expansion on the downside is happening. Downside band is expanding, although it's a high volatile bearish biased consolidation is what the Bollinger Bands are indicating on both indices. Look at the support resistance levels at 17,000 levels is going to be the crucial thing that it will be able to hold that 17,750 levels, and if that's cleared, then 17,200, 17,300, then 17,350, 400 levels, then 17,500, 17,600 for match 23 retracement levels, and above that 17,800, 17,850. That's level for the next day. Banknifty downside, the support is 35,600, 35,900, that is near to 36,000 is where the supports are seen. Above that you have 36,300 to 36,800, it's a Fibonacci 38 retracement levels. Then you have a gap resistance that's seen. It's crucial to close above that. It's 37,000 nearby starts and 37,500 Fibonacci 23 retracement where it ends. So any close above that is crucial in the Banknifty. Similarly, the gap resistance also, the Nifty also interesting. So any close above this 17,400 is also crucial. 7,500 also is crucial because it's another major resistance also. And if that gap is cleared, then you have 37,700, 800 zone and 38,000 zones. Right? Then 38,500 zones and 39,400. So those are the crucial loads on the upside. Downside, similarly, the supports would be 35,600, 35,900 levels, then 35,000 Fibonacci 50 retracement level rounds, and then 34 350 750 zone, and then we have a gap support which is just near to the previous resistance zone of 35,800 34,100, which is a Fibonacci 61 retracement level also. So downside 34,000 is very crucial, and upside 37,500 and then 39,400. Similarly here, downside it would be 16,400. That would be very crucial, right? And holding 700 is also crucial. On the upside, we have 17,400 above, the gap resistance that's cleared, and then 17,500 Fibonacci 23, and then 18,000 rounding. That's all the levels that you have to see. On the upside again, on top of that, 18,350 real indication of any up move breakouts that can happen. 18,350 would be this previous swing high that was formed, lower high, right? So basically, what is happening is, it's not doing it is in a trend line channel both. It had broken out, and then it had made a swing high, lower swing high, and then it has fallen back to the trend line. Now it is consolidating there, and the trying to decide whether it has fallen back into the channel or move up or stay there for some time, right? So number wise, if you see, it's like flat day, 33 points after a gap down, 75 points up after a gap down, right? That's what Nifty and Banknifty trend line channel we have seen. Indices both gapped up and stayed in the 100 and 500. Bollinger Bands is saying consolidation, but there is a bearish bias because of the price below the 200 and the expansion. We have seen all that. Now let's get to the momentum and the divergence after having seen the price and support resistance levels, right? So momentum is sideways. Clear consolidation is happening. Zigzag moves in the sideways zone between 60 and 40 is what is happening. Both indices. Medium term also is sideways, right? And the momentum is falling basically, and then rising up, then falling. So pure consolidation of the momentum, no divergence seen as of now. Trend is in the bearish zones on the medium term and the short term, both, right? And it's falling strong. It's a weak strength. That means the bearish zone that's great. It's crossing over again, and then again crossing over to the bull zones, then bear zones. So it goes on. So trend as of now, both medium term and trend is down. That is for sure, no doubt about that. Momentum is kind of sideways, neither up, neither down. Volatility again spiked. It's spiking and then coming down. It went to the 18 levels and then again spiked 20 levels above. Now it's 20 above. So say it's a cautious zones 20.28 with a spike of 4.5% that happened. Right, and implied volatility of the Nifty is 20. Implied volatility percentage is 81.5. So implied volatility percentage gives an indication based on a on a 52-week basis. So it gives a more clear picture on where exactly the VIX, India VIX. Where exactly the volatility. So 81.5 is in the very high forms. Anything above the 50% shows that the volatility is huge, right? And India VIX on top of that is about 20 is also an indication. So implied volatility percentile and India VIX is at high volatile zones. You have to be careful, right? And that's indicative in the zigzag movement, the chopping movements, and sudden reversals and M patterns and V patterns and N patterns, W patterns. All this is because of the high volatility that is in the market, right? The sentiment analysis, sentiment meter is what India VIX or volatility indexes are all about. Coming to the open interest analysis, you can see there is some unwinding of the put portion, some unwinding of the call portion is also seen on the OTM levels and ITM levels for the put. Some unwinding of the Banknifty also seen calls, you can see, but it's for the expiry of May 5th. You have 2 more days left. The holiday is coming, so next time when it opens, it may be a good time ticket that might have happened. Right? Look at the levels of 17,000 and 17,500. 500 points ranges where the put and call rates are fighting. 16,000 and 17,600 is the range. Second level of support and resistance where the highest put and call rating is seen. And 0.77 put call ratio on the Nifty is closer to the bullishness than bearishness, you can say. But a short build-up is what futures open interest is saying. Right? Now, Banknifty options open interest levels are 36,000 and 37,000 for the highest put and call rating. Support and resistance can be seen there. 35,500 and 36,500 is where the second level of highest put and call rating is seen there. And 0.74 is also closer to the bullishness, you can say, than bearishness. But short covering is what you see in the Banknifty. That's kind of bullish. Close short, I have now started thinking about going long. Right? So Banknifty is more bullish than Nifty as for the futures open interest will be about that happened last. At put call ratio, both are kind of not really bullish but not bearish either. But heading towards more closer to the bullishness. Levels are wide, 500 points and 1,000 points apart on the indices. So that's where we are, right? For weekly expiry of May 5th, 2022. Now look at what happened on Monday, right? It's a HDFC twin day that did well. ITC, FMCG also did well. That's about heavyweights. All others were kind of red. And sector-wise, if you see, all major sectors that did not do well. FMCG, overall financial services, auto, IT, all these did not do well. And metals and pharma managed to do well. Chemicals with classes for some reason, right? So sectoral performance of major sectors did not happen. That's why we had a down day, not a flat day, probably, right? Now, coming to the index heavyweights, HDFC is showing some bounce up from the levels where it has climbed into the momentum of sideways from bearishness, and trend is about to cross over. So it is also bouncing up from the trend line channel zones, and so long way to go. So there is a gap down. If there is a gap window there, so whether that is closing the 1480 levels is something that you watch out. The gaps are very powerful and provide stiff support and resistance as always. So anyway, it has climbed back to the sideways zones on the bullishness. Same with the HDFC twin. HDFC also is showing green and has climbed back into the bullish zones, into the sideways zones basically, and green candle indicates that it is heading towards taking out the support which it had reached earlier, right? So momentum is catching up, and small reversal is started, you can say. Probably this may be the right time to get in HDFC, provided we see that this price is again coming back and taking a support at the 40 levels of the RSI. If that is happening, then that may indicate that it is basically, so right now it's in the sideways zone, but little far away from the RSI 40. So it can reverse back and come and fall on the RSI 40 and then bounce up. That's a time when it will be ideal to take. Now, if that does not happen, you'll have to wait for the same thing to happen above the RSI 60. Reliance Industries has also done well. It's still in the bullish zones. There is every possibility of divergences to happen, and then it definitely had a flat breakout also. There is gained substantially, and it also has a cup and handle breakout only in the progress. And bullish zones, really it is. Volumes are good, and trend is also good, and momentum is also good. So price action indicates some green in the last, and momentum is taking a support near the 60. So it could again bounce up. So as long as it's not slipping back consistently on the sideways zones, you can keep trading this in Reliance Industries. IT stocks are showing trouble. Infosys also is showing the trouble. It's another red day, and it's in the bear zone still. But there is a potential, up move that can happen. There is a bullish divergence that may be falling, where the momentum is rising up and the price is falling, right? So we'll have to see whether it's climbing above that divergence candle top. If the price moves above that, it could gain reasonably, since it's a daily chemical divergence that may be happening. But remember that there is a resistance zone here where it had gap down, right? So the gap is formed. So clearing the gap would be a hurdle, just like HDFC gap down also. So in few out of times to go up, but yeah, so stay away from it. It's showing bearishness, but it's trying to come out. It may be coming up, is what the price action is indicating, and momentum is indicating basically, not more than price action, right? Tata Consultancy also is somewhat green, better than an Nifty. It's climbed back to the sideways zones, at least from the bullish zones, and there is a possibility that it can again retest the support zones below. Right, if it is managing to climb above the previous, managing to take a support of the momentum of the 40 and climb above the previous candle high, then probably it may. But there is a reversal that is forming. It may take time, but it's in much better shape than the Nifty. HDFC Bank is also fallen back to the support zone after a breakout from there, and it's formed green, but momentum is lost. The bullishness is lost, and it's in the sideways. You'll have to wait for that to catch up. Right now, it may be consolidating at this major support zone, and you have to clip because whether it's falling back. It has already fallen back from trendline channel when consolidating. So this support zone where it is right now is very crucial. If that breaks down, then it may again take longer time than expected to recover the correction. Kodak Bank is showing greenery. Momentum is rising up, and it's a green day. And remember, it is at a major support zone, and then as the fourth time in the last 1 or 2 months, trying to bounce up and take the resistance immediately above. So that bold dark line that you see is a major resistance, which we have to see whether it is able to close above that. It has multiple resistance on the other side, upside, but this seems to be a major, formed a bottom at this level where the support is there. So it may be hovering around this until something event happens when it gets pushed to break out all this eventually. Right? But right now it's at support zones, you can say, and sideways price action is what is happening for Kodak Bank. So overall, if you see, there is some indication of a trend reversal happening, except in the Nifty. Some consolidation can be seen in ICICI, Kodak, HDFC. Bank stock showing some consolidation. IT is weak and Reliance is doing good, but small retracement is happening. Just remember, it has substantial run, so there could be retracement that may extend also in Reliance, so we have to be cautious, but it still maintains, as long as it still maintains the momentum, it should be fine. So that's a story about index heavyweights. Sectorial performance, if you see IT, so it was more or less down and flat kind of day. IT closed 1.5% down, and auto closed 1.2% down. FMCG closed, means others are flat. FMCG is flat 0.2%, and realty is flat 0.2%, and pharma is flat, and metal is also kind of 0.5% up, right? So basically, all the momentums are sideways and all except IT, which is still in the bearish on the short term. So the top-down approach of picking the highest performing stocks in the highest performing sector may not be possible, right? So you'll have to stock specific basically. Institutional participation, if you see, last day also you had seen nearly 1,850 crores of crash selling by the Fyers by equal amount and more of buying had happened from the DIS, which caused the rebound. So you can see the confidence in the market. Confidence of the retailers in the market is what is evident. Remember that FIs has been continuously selling with a small 700 crore or something, small, but buying that happened 2 days back. But otherwise, it's our buying of the institutional foreign institutions continues, while DIS continuously keeps on buying, making the market to stay afloat. Now dollar and currency pair and all these things. So euro index, you can see on the right side. So it is at a breakout zone. It's at a major resistance of 103 plus levels, and so that's kind of 5-year resistance level. So that it may be taking out that. It already taken out that. Now it is facing some sell-offs and some resistance there. But look at the momentum. It's remained bullish for a long time, and dollar index is heading high. Look at right, left side, you can see that the USD INR currency pair, small cool off, but still remember 76.5 is where it is very close to the 77 plus levels of all-time high levels. Momentum slightly slipped into the sideways, but a rupee is weakened to so bad level, and it may be just the central bank interventions that may be keeping it stay afloat there. But if the dollar is keeps on rising, rupee weakening is evident. Look at this. Dow Jones is so US market is what you see here. Dow Jones is slipped below the major support zone and is trying to climb back. The weak size is indicating that there is some buying that is happening there. Remember, 32,087 is where the next support, if that does not happen. So to keep a close watch whether it climbs back to this famous support zones or not. The momentum also had slipped into the bearish zones and now trying to climb back to the sideways, and that's where we are on the Dow Jones. That bearishness can be seen on the other indices of S&P 500 also. You can see that it is bearishness, but there is some bullish divergence that is forming where the price is moving down and the momentum is moving up. So there is a chance that it can climb into the sideways. Trying to climb on the edge and trying to climb back into the support zones, and trying to catch up on the momentum is what is happening exactly. Nasdaq also, you can see some greenery, but overall it's also in the bearish zones, some bullish divergence that can be seen. That could lift the market back into the zones where it had supports. So Nasdaq is at a major support zone. S&P 500 has slipped from the major support zone on the edge. Dow Jones also on the edge, it slipped and trying to bounce up, do a sideways momentum on the is what is. And so US markets are jittery and on the edge kind of plays what is happening. So you have to keep a close watch if big crash downs from here further happens or not. If that happens, then our markets also likely to crash. Right? If it manages to consolidate for some more time at these levels, then it should be okay. Crude oil is showing again 104 plus kind of levels. Momentum is sideways low, but yeah, so it's not trending up to the all-time high levels of 120 anyway. But neither is it able to maintain the 100 below levels. Right? So it's kind of consolidating since several weeks with the momentum sideways and trend also indicating some kind of pullback. Gold is almost given up the major support zones that it had, and it has fallen into the bearish zones in the short term. So remember, it had attempted a breakout to hit inches away from the all-time high level of 2074. Looks like second attempt also failed near 22,000. 2074 is all-time high. In 2000, second attempt also failed, and now it seems like it cannot sustain the levels where it had taken support and from where it had broken out from there. So it has now fallen almost back into the channel, and it may be consolidating or taking supports at multiple levels that you can see below. So gold is not going to break out in the medium term, on the short term, basically. Actionables 2, Coromandel International seems to be having a breakout, some kind of breakout channel. Trendline channel is clearly seen there and is breaking out of that. Remember, but it's at a resistance zone. This is not ready to trade. The momentum could fall down lightly and then come back to 60 levels and then bounce up. So that's the time the entry has to be taken, not before that, right? That time it would have enough energy to take out this resistance of 955, 931, that level. So only then you have a trade here, otherwise you don't have. But otherwise the momentum is rising, ADX trend is rising, on weekly as well as daily, and the chart that you see is weekly. Trade has to be taken on lower time frames, right? So, but overall bullishness can be seen, but it's not a ready to take trade because it's at a very close to resistance zones. ITC also, it's having a bullish reverse divergence, right? And there is every likelihood that it can take out the swing highs that it had made earlier, since it is momentum has taken a support and then started bouncing up. Remember, it had a breakout from the channel, well within another channel, and it is heading at least a price towards the 300 levels. It's a possible channel top, right? So it's clearly bullish ITC. FMCG sector also is not that not that bad. So wrap up is so for last several days, the view, the daily market view is not changing because market is not doing anything. It's zigzagging, it's choppy, it's moving up, down. So the view cannot, view can only be what the chart says. The view based on the chart pattern, support levels, sideways momentum, trend turning bearish, and Bollinger Bands volatility, and all of this, it tells me that I can only have a view which is mildly bearish, and overall it's neutral view that I have. Right? It's neutral with my bearish bias. This is what I have. Right? I expect that would mean that I would expect the market to move sideways, choppy, moving here and there, right? Up and down, range bound. That's what I see. So if you look back, you can see that a very good recovery of 15-20% had happened, which is a good thing, right? It had gone down to 15,500 levels nearby and then bounced up neatly. So the strength and the buyers and the confidence and everything is there. It's not bear market for sure, but the thing is, it's consolidating right now. It's not in not having enough global cues to move further up and rally. There's nothing. Overall globally, if you see the economic conditions and the sentiments and everything, we have a war that is still going on. We have Fed rate, the mother market is falling. All of this is negative, so it's not. Neither is it ready to fail and crash, and neither it is ready to get into a bear market. That's what we are right now. Look at the Fyers. They keep selling. Right? Relentless lending is what is happening, and until we get a good global cue, we just would be remaining like this. 17,500, 37,500 would be needs to be watched out whether it can have sustainable price levels maintained at those levels, and 18,350 and 39,400 above levels would indicate that we may be heading for another rally. Until then, it would be moving up and down, back and forth. 16,400 downside, 34,000 would be what we have to look at the downside for a bearishness to be confirmed. So one of these stocks is that it's still happening. Global cues are not great. Fed inflation news, Fed interest rate hikes are all not great for the markets. Volatility is still there. Remember, right now we have already about 20. Right? It's not about ready to cool off further to this 15 or 10 kind of levels anymore. So those two factors are there. 15-20% of recovery is a good thing. CIP bounce is still possible because it's a resistance zone. It is acting as support now for the price, and double top is there, which is opposite of what is expected from a bounce. Double top, if neckline is broken, it can go down. So both the bounce and the breakdown, both are possible. So you don't know what happens. Market decides. So which is about 20, you have to be cautious, and always have hedge positions like vertical spreads, non-directional spreads, or calendar spreads, whatever, right? Where the risk is defined based on and the position has to be based on a view, right? But once the view is formed, stick to that and then take the loss if it is a loss, right? But you will have only defined loss, and your capital will be there, right? And position size according to reduce the position size when volatility is high. And if you're not confident, then just stay away from trading, and preserve your capital for a better times tomorrow. So that's a view, mild bearish, neutral view with the mild bearish biasness is what I have. And reasons we already seen in all the studies that we had shown in the previous slides. I hope this helps you to frame your own view for the market and your trade plan for the next day. So thanks for watching. So please don't forget to subscribe if you're not. Please, we have very few subscriptions and appreciate your help in this regard. Keep us motivated to keep doing this every day. Right? Thanks for watching. Happy trading, happy learning. Bye.